Have you ever had an idea that was so clear it was like a 3D movie? Have you ever told a friend about the idea and they told you, wow, if you could only make that into a business, you would be rich? Sound familiar? Welcome to Knowledge to Currency. I'm your host, Senator Porter, with my co-host, Roosevelt Williams III, and we're here to help you take action. This is free information. We only ask one thing: build a strong foundation and mindset. We have insight to help you get started. Most of us just need a push. What's up? It's Nakia, Senator Porter here from Knowledge to Currency, and I have Krystle Simpson from Pacific Shore Capital, correct?
That's right.
Oh, man, I didn't mess that
you
up.
You got it.
And this is episode 34, Knowledge to Currency. Welcome to the show.
Thanks for having me.
Thank you so much.
I'm excited.
So I've had your husband on. Now I'm having the better half on.
Yep.
And we're going to compare whose show is better.
Let's see. I always win anyway. So.
Okay. So I know that you guys do a couple different things. You have a podcast. You also have commercial real estate. And then you also lend in commercial real estate space. And besides being a mom, is there anything I left out?
I think that's all I can manage to fit in right now.
It's a lot of things going on right now.
I have 2 dogs, like 58 plants, and all those other things.
Wonderful.
Lots of things to take care of.
For our audience, what's the name of your or I guess you would say your podcast or YouTube channel?
Podcast. We have a YouTube too, but it's called Getting the Cash Flow Game with K&K, and that's also the name of our YouTube channel. Also.
Okay.
So
nice. And what made you kind of go into that space? 'Cause you guys did it before a lot of people.
Yeah, actually it was more Kenny than me, but I had actually found Gary Vee and I was like, I love this guy, but Kenny would love him even more. He says like F-bombs every other word. It's so Kenny. So I was like, hey, listen to this guy. And then he just literally fell in love with him. And then he flew out to do this like 4D deep dive to like pay him privately for a couple days of his time. And then he was just like, share everything you know. So we were like, all right, we're just going to start a podcast. We recorded like 10 episodes and then we launched it. And that's been 4 years ago now. And I think we have maybe 200 episodes and we've had a lot of really cool guests. So
Awesome. And then for your daytime job, let's talk about that. So you do commercial lending, correct?
I do. Yeah. I've been doing that since I was 19. So like 20 years now.
You look like 25,
Thank you.
That's fine.
Genetics.
So let's talk about commercial lending because I'm very interested. I kind of know how it works, but I want an expert on here before I start making up stuff.
Sure.
All right. So let's say, for instance, I had a single family home or portfolio, I should say, like 10 properties, and I wanted to sell those properties and get a commercial space like a apartment complex or something like that. Is that kind of where I would talk to someone like you instead of going to the bank?
Yeah, I think the thing that's helpful instead of the bank directly is the banks have this little box. And if you don't fit within that box, they can't do the deal for you.
Right.
And then secondly, I like to say, because I'm an investor myself, so I think about all the things that you're concerned about or the things that you haven't thought about that you should think about.
Sure.
So I own my own properties. I used to own a property management company. We managed 1,500 units in San Diego.
Right.
So just like I've handled pretty much every part of the cycle. So you're just not going to get that with a lender too. They're like, give me your package and then I'll go and submit it. So for me, I'm structuring the deal. It's kind of like, okay, let's present it in its best light and give you all of the options that are on the table. So there's a lot of different options. A lot of banks are different. It's very different than residential financing where you just go get like a Fannie Mae loan and you can kind of go anywhere. Pricing varies a little bit, but like the programs are the same. You just get like the same 30-year fixed over and over again.
Right.
With commercial, it's very different because we consider these business loans. And so we don't have a lot of the same rules. And so the terms are very different and they range pretty widely.
Awesome. So I got my portfolio. I'm going to sell everything. I want to get the actual space. So then do you also help them find a property or refer them to an agent, brokerage?
I connect them to a broker that I work with. And so my kind of what I was taught is like jack of all trades, master of none.
Sure.
So I tried to be a jack of all trades when I was younger. And then I realized that that's really not doing that's not doing a service to my clients. So what I kind of do is figure out what they're looking for, what kind of area, what type of, like, maybe approximate size of the property.
Right.
And then I would pair them with the broker that I know that specializes in that sort of thing. And I mean, just like residential too, I feel like it's a really small world. So if you've been in the business for any amount of time, you kind of know who all the players are.
Sure.
So it's just helpful. Like, I want to help people to connect to the right people. I want to make them successful. I want to make sure that they want to keep buying properties and investing and getting cash flow and all that good stuff. So I would set them up with a good broker.
That's awesome. So then, as far as like money down, like traditional loan is 3 to 3.5% or 5% down. If I'm buying an apartment complex, I need a little more like juice in this.
We call it skin in the game.
Right?
Yeah, we want more skin in the game. So technically, most lenders go to 75% LTV.
Mm-hmm.
Some go to 80. But this is the thing. We lend based on cash flow. So the cash flow has to support the debt. And we have kind of standard underwriting that we use.
Mm-hmm.
And so if it generally doesn't hit that in San Diego. If you live somewhere else and cap rates are higher. So basically what is a good rule of thumb is the higher the cap rate, the higher the loan amount.
Right.
So if you're buying by the beach and it's like a 3 cap, you're going to put a lot of money down.
Yeah, that's not good.
Like 50 to 60% down.
And just for the audience that may not understand cap rate, could you kind of give them an idea what that means?
Yeah, so it's basically kind of what the market is determining, but here's an easy calculation of the cap rate. You basically take the NOI and you can divide it by the sales price, like the price you want to get, or you can take the NOI and divide it by the cap rate of the market. So like you could go on to LoopNet, for example, and kind of get an idea of like where things are selling at and go, okay, well, in Pacific Beach, properties are selling between a 3.5 and 3.75 cap rate. So then you would take the NOI on a property you're looking at and say, okay, well, let me take that times the cap rate, the market cap rate, and then that will spit out kind of like what the value would be of the property.
And LoopNet's probably one of the easiest ways. It's kind of like a Zillow for those type of properties.
It is. It's the best free resource to look for properties. MLS lists some of that stuff. You have to, if you're a realtor or whatever, but it doesn't even capture all of it because commercial, we use CoStar, and CoStar is like the paid MLS for real estate brokers, but then they have LoopNet, which is free, and they don't show you all the listings, but they show you a lot of them.
Most of them, more than you. I mean, you got to put down 25%. So.
Exactly. And there's stuff on CoStar that you won't see on LoopNet, for example. So that's why you really want to use a broker when you're looking for apartments, because they're going to have stuff that's off market and then stuff that's even listed you just don't have access to.
Now, in your opinion or professional opinion, would you start at a commercial space versus doing like the single family one at a time like most people are taught?
I think if you can buy a bigger building, do it. So for example, I have clients who maybe sold a company or inherited money or something like that, and they have the down payment, but the biggest barrier for people is really the down payment.
Sure.
And then also there's like this discomfort, right? Of like, it feels like this really big sophisticated thing, but it's not. I actually think apartments are much better than 1 to 4 units.
Sure.
And that is specifically because you can go buy a 4 unit and get a 75% loan and then be negative cash flow every month on that property.
Womp womp.
Yeah.
That's not good.
You can do that,
Right.
but you cannot do that with an apartment building. A lender wouldn't do that for you. So a lender is a really good backstop because not only will they only lend to you on cash flow, but they kind of put in some conservative buffers in there to make sure that you're not going to be underwater.
So it just kind of back up like from the 2008, 2009 crash. With the commercial space, they were more conservative to protect you from putting yourself in a bad situation, probably.
Yes, and I don't know the stats, but I can tell you, like, very, very few properties that went back to the bank. It just doesn't happen. And yes, it happened more in other areas, like boom and bust areas.
Sure.
Arizona, is a big one, or, stuff in like Fresno, things like that, areas that are really known for being boom and bust areas. But in San Diego, during the last crash, apartment values continued to go up even through the recession.
Yeah, rent keeps going up out here,
Yes,
for sure.
and cash flow was not hurt. Like if you talk to anybody who owned apartments, they're like, my rents didn't go down. Like my cash
Sure.
flow was the same.
Sure.
More people bunked up in apartments because they needed help to pay the rent,
Sure.
but we didn't have rents dropping.
which is
or values.
amazing, right?
Right.
So then we got the down payment. Talk to you, refer me to one of your specialized realtors. Now we find the property. How long does it take to close if everything's perfect?
So pretty much a standard closing is 60 days.
Okay.
But in a competitive market, there are times that you have to close in 30 or 45 days.
Okay.
So if we know that up front, we can try to work with that. And we have closed deals in 30 or 45 days in the right circumstances. It's like assuming you give me all of your paperwork, and we can maybe push the appraiser to get the appraisal back a little faster. But pretty standard is 60 days, and typically in a normal market, nobody's going to try to push you to close sooner unless you're in a multiple offer situation and it's competitive, maybe.
Yeah, I had Sydney from South Shore appraisals for a multi-unit. I know like for a mansion and stuff, they're over $1,100, I believe. Is it like way crazy for an apartment complex?
It's more, and really, and people think that's super expensive, but you have to think about it really that you're dealing with more units.
For sure.
So, just like everything, inflation brought the price up.
Sure.
So now I would say kind of your base appraisal is probably like 3,200 and
Okay.
up. 3,200 to maybe 4,500, let's say, depending on how big the building is. So if it's like a 5-unit, you're probably paying like 3,000 to 3,200.
Okay.
Yeah.
Okay, so the bigger building could be made. Wait, what's the biggest project that you had closed in your career?
23 million. Yeah.
Was
Just
that a
last
good,
year, I
that was a-
think. Yeah.
That's a good month for you.
That was if I could just do like 10 of those a year, I would be sitting pretty.
And then how do you get referrals?
So most of my business has been referral based
Okay.
from other clients that I've worked with. And we just started marketing. So around the same time that we started the podcast is the same time that we were like, we literally live off of referrals. We
Sure.
need to start marketing ourselves.
Okay.
So now still a pretty big portion of our business is referral based.
Okay.
But then obviously because we do social media and the podcast and YouTube, we have had a lot of people, like what I find so great about the marketing is that if somebody doesn't know me, they go and Google me naturally, right? So
Right.
then Krystle has really great reviews online. She's on YouTube. She has this Instagram. She's putting out all this content. She's doing podcasts. It really helps to validate who you are, and it gives you credibility. And people call me like they know me.
Right.
Like they literally feel like they know you.
Right.
And that's so cool because you just start off in a much better place when people feel like they know who you are.
Oh yeah.
They want to do business.
Especially when it's with money.
Yes.
We learned that's a parasocial relationship. So it's like if you watch Kobe Bryant, when he passed away, you felt like a friend passed away
Yes.
because you saw him since he was a kid go all the way to be an adult, and then you have that. So
You watch their struggles. You
Yeah,
watch when they're all over the
exactly.
news for bad things and good things.
good things,
And yeah.
exactly. So I think for my social media and stuff like that, I try to be the person you see online is who you get to meet, so that you're not always on like a character or whatever, you know.
And that's great because I think that is sometimes the disappointment that people have is like whoever they love watching someone's content and then they meet them in person and they're not even close to the same person.
Not at all. You're like, whoa.
Yeah. I feel like podcasts though are such a great way to get to see who somebody really is.
True.
Because it's so conversational
Yeah.
that like if you're watching a YouTube video, I get it. If someone's a YouTube star, whoever you see on camera might be a different person. But in a podcast, you're just being yourself, having a conversation. So
I agree. And usually they put out the content constantly, so you kind of see them on their good and bad days.
Yeah.
Good hair days, bad hair days.
yeah.
I agree with that for sure. So as far as like, do you have any big announcements or projects that you're working on?
Yeah, it's so funny because I just joined a mastermind and I have always been like a little nervous to tell people things until I have it absolutely perfect.
Oh, okay.
So I will tell you though right now because I have to get over that. So
Tell us about it.
So I'm in the process of launching a course
Oh, nice.
on how to buy multifamily buildings. So
Nice.
there's a lot of real estate courses out there, but a lot of them are like, wholesaling, astro flipping,
Yeah.
Airbnb, syndicating. So my course is really about buying buildings yourself.
Okay.
And even if you've never bought anything, then kind of helping you to make that transition from, okay, first you start with residential and you trade up, you keep trading up
Sure.
into apartments. And so I've been literally been working on it for 3 years. But this is the year. This is the year I'm going to get it out there. No joke. I literally have a coach and somebody holding me accountable because I'm like, I am in my own way.
Yeah.
So that is the big thing that I'm working on to get launched this year, and I'm excited about it.
That's super awesome.
Yeah.
And you got the qualifications, so you're not someone that's. I've had experiences where people are telling you how to do something and they've never done it.
Yeah, and it's funny because I already have imposter syndrome because I'm like, there's a million people, richer than me that own more apartments than me. But also everybody gets started somewhere. And this is the kind of thing I tell people because once they get in the apartment, into owning apartments like locally, people go like, oh, what about this guy or that guy that owns 1,000 units or 3,000 units or 5,000 units? And I'm like, that's cool.
Right.
But guess what? Their strategy today is completely different than when they were buying their first properties.
Yeah.
So if you watch the big guy buying the buildings, like luxury buildings or doing this or doing that, that's not probably what you should be doing at your level.
Yeah.
So I love that I'm maybe a couple steps ahead of people that I can help.
Right.
Because it's more realistic that you could get to where I'm at. And I'm not so big now that I can't meet you where you're at.
Oh, yeah.
So.
Yeah. Or like they get to the point where they're so big that they can't even talk to you anymore. You got to talk to their handlers. And
yeah. And it's just like even the mastermind I joined, it's like even you, I know you're part of a mastermind.
Mm-hmm.
We all know, Tony Robbins, for example.
Right.
It's like, do you want to go to Tony Robbinson's mastermind? You don't really get to see him. I think the only people who get to spend time with him have to pay maybe like $500,000 for like an hour just to be with a guy. So then you go, and you know what? Like he's so big, I can't even like imagine.
Right.
Yeah. So it's like, I want to be with people who are like me or who are maybe bigger than me or where I want to be, but they're not so far ahead that we can't relate anymore.
Exactly. I agree with that. I think that's important. And even for those individuals, they only have so much time. Once you scale up to a point, you can't help everybody.
Right.
So you don't want to, I don't know. I feel like some people try to think they can help everyone and you can't. You only have so many hours in a day.
And I think also in their pricing, it kind of reflects that. So, for example, I think it's actually really smart that guys like Tony Robbins or Ed Milet or some of these guys are charging like $500,000 to $1 million because, to be honest, unless you can afford to pay that amount, they probably can't help you yet. Like you need to have gone through all these things and reached a certain level before you can even comprehend
what they're talking about.
Yes.
Yeah, the 10,000 hours. Got to put in your 10,000 hours to master something. So I agree. So the mastermind is something that you want to do in the coaching, anything else?
No, I think that's really my biggest focus is I just want to help people to do what we've done because my entire goal, so I'm a renter still. And a lot of people are like, why? And well, part of it's my husband. The other part of it is that we kind of made this agreement that until our cash flow completely covers our entire lifestyle, including a house, we're not going to do that. Like all of my capital, all the money that I make in my business goes back to be reinvested as much as humanly possible. So if I buy a house, I have to take that money off the table for a down payment. I have to make repairs. Of course, I'm going to want to fix it up, all those things. And so I've been able to build that cash flow. I could buy the house now if I wanted, but I'm like, once you get in that, the hard part is once you get in the investment mindset, I'm like, well, gosh, that's X dollars that I'm taking off the table. I could buy another deal that cash flows $5,000 a month or $10,000 a month or whatever.
You just gonna rent forever. Just keep buying.
So then I'm like, yeah, maybe just a few more buildings and then I'll do it. So he kind of like we kind of got ourselves in that idea of investing. And people go, well, that's your family and it's your this. Yeah, but guess what? My cash flow is also going to be for my family.
Oh yeah, and I think too. What I've been learning with life insurance, a lot of times people will say, okay, I want to leave all this to their children or whatnot. their kids grow up and obviously they don't have the struggles that they had, then you pass away and then their kids just blow the money. I think it's not bad if you just got insurance, and when you do pass, if you, let's say you had, $50 million, but you had an insurance policy for $500,000, if the kid didn't have to go through the struggles as you, and you've really poured into that person, they should be able to replicate based on all the stuff you taught them.
Absolutely.
You know what I mean? Because then some kids don't really work hard because they're like, when my dad dies, I'm going to get whatever. And you're like, dang, thinking that your dad dying. Like,
yeah, you're like praying.
Yeah, like,
oh, we tripped and fell. Is this the day?
Yeah, so I think I really think people should think about that, like having insurance policies and things of that nature, so that your kids aren't having a big bill come when you pass.
For sure. No, I always tease about that because, Kenny and I don't have that. And so I'm like, I always tease that, like, when my mom dies, that I'm just going to get a big bill, which is probably the case. But I think the thing is, too, with, like, legacy and passing on your assets is not only passing on your assets, but passing on your knowledge. Like, I want to create generational wealth for my family, but that includes educating my kids about how to, like, do finances, invest their money, how, like, those things that they're never going to learn in school.
Right.
It's like, I know for a lot of people, this is a boring topic, or maybe it's a stressful topic because you're like, you don't have confidence in it. But if I can pass this knowledge on to my kids about having the right mindset, because if I would have started this,
Younger.
20 years ago, I'd be in a completely different place right now. I'd be retired.
Right.
So, and I get it. We all have to live and learn, and we have our own journeys. But part of that is, like, teaching the people that are coming after you how to manage the money as best you can, so that they can take that information and then they can do it better for their kids.
I think that's one of the reasons why I had the YouTube channel up, because this information will internally or always be out there.
Yeah.
People could look at the information, they can learn from it, contact people like yourself that are experts. Because that's the thing, too. You don't necessarily have to be an expert. Find an expert and then talk to them, ask the questions, and then, kind of build off of that.
Absolutely. And everything is repetition, right? So I think when something's intimidating to you, it's because you've never done it before. Of course it's intimidating.
Right.
But the more practice you get, the better you get.
That's true. I agree with that wholeheartedly. So then, are you have any commercial space that you got an eye on now?
Not right now. So we bought a building last year. So our goal is always buy one building a year and buy like the biggest building I possibly can.
Okay.
So last year we bought a 12-unit building, and we're kind of doing some renovations there. And then I'm selling a building right now in Long Beach.
Okay.
It just went under contract today. Woohoo!
Nice.
And then once I sell that building, I will be looking to buy another property.
Do you do a 1031 exchange like you do on? Okay, so it's all the same regardless if it's a skyscraper or.
Yeah, and I could go from an apartment building to a fourplex as long as it meets my exchange requirements, or an apartment building to an office building as long as it's for investment purposes.
Yeah.
So basically it's like for like, meaning an investment property for an investment property, not necessarily like the same type of property, not the same type of asset.
So as long as it's over 5 or over 4 units.
No.
Oh, really?
I could buy a single family home that's an investment property, and it would meet my exchange requirements as long as it's not my primary residence.
Yep.
So basically any kind of real estate that is for investment purposes, you can 1031 exchange into.
Okay. That's awesome, because I misunderstood that, because we were talking about that too. The reason why you don't do your primary is because you homesteaded, so you don't have to do the 1031 exchange on that.
So you can't do it if it's your primary, technically.
Right,
like
exactly.
People break the rules, right? But that's the slippery slope. That's a slippery slope. Yeah, so you want to follow the rules, but you don't do that with your primary. And you're right, because I mean, honestly, the way that we first got the money for the down payment is that I originally wanted to buy a 4-unit, but we just weren't finding anything. We were going to live in one of the units and then rent out the rest, but I just couldn't find anything that we could afford that we could buy. So we ended up buying a house. We did the FHA, 3.5% down.
Right.
I did like a renovation, and then we actually ended up adding one story onto the house. This house was in Mission Hills.
Wow.
And we sold it. And of course, me and my husband have the most romantic proposal story. We went to the courthouse and got married before we sold the house, because as a married couple, if you sell your house, you can get $500,000 profit from your home tax-free after 2 years.
That's awesome.
So we did that, and that $500,000 that we made, we then bought our first apartment building with.
So he's
And
like,
that's how
I
we did it.
really love you.
Yeah, exactly. I'm always like, wow, you're so romantic. But
it worked.
I don't know. It felt pretty romantic to me. I was like, 500 grand. All right.
It worked. That's awesome.
Yeah.
So you right over there by the, what is it? What's the ship called over there? That's right on the harbor right there.
Oh gosh. I don't know.
I almost wanted to call it the Mayflower, the
Yes,
Midway.
The Midway. There we go.
The
Yeah.
Mayflower.
USS Midway. Yes.
Okay. So you guys got married there?
Yeah, okay, so that day I actually called the wedding planner because I was like, this is not the way this is going to go down for me. So I'm calling the wedding planner right now, and we're going to plan an actual wedding. So we did that. We had an actual ceremony almost a year later.
Okay.
Yeah.
So it's worked out.
It worked out.
Yeah, especially save you 500 grand.
It worked out. And you know what? That was 2014.
Okay.
And so I had my first house in 2014 that I sold. I sold that house. And then here we are in 2023. I've owned probably almost, I have a spreadsheet. I've owned like about almost 200 units that we've continuously traded into.
Sure.
But now I own like 50 units by myself. And our cash flow is about $26,000 a month just from the apartments. And growing, because there's stuff that I can actually still improve.
Right.
So I just feel like that's such a great story for people. Like, this is completely possible for you. And when you feel like you're buying that house, it just feels like so insignificant, and cash flow seems so far away.
Right.
But if you just keep chipping away at it, because I thought about this, if I never bought another building again, if I just stopped right here,
Right.
I would continue to pay down my mortgage, and my monthly cash flow would continue to rise. So by the time I pass away, like, my kids could potentially be getting like $50,000 a month in cash flow if I never bought another building again.
Which is a huge deal.
Exactly. So people can move at their own pace, but I think this is the important part, is that you do it, because it just seems so insignificant in the beginning, but as you start this, it starts snowballing and compounding.
Yeah, compounding.
Then yes, this is a big word that people like to use. So as you start compounding, it just gets bigger and bigger, and before you know it, you go, wow, I've built something pretty good. Like, I can keep going, I can retire, I can just pay it down, but you have options, and that gives you freedom.
And the time goes by quick, because if you think about how quickly COVID went through, and I guess we're out of COVID, or we're in, I don't know.
Yeah.
But it just went by so quickly.
Yeah, and I can tell you, I would be bigger now because I've made as many successes as I've had. I've also done some really stupid things, like a couple of stupid things that I've literally lost money on. It's never been apartments.
Sure.
But I have lost money, and that money could have bought me more apartments. I could be bigger today. So here I am, having made some big, expensive mistakes.
Sure.
And I'm still here at this level. So that is even more encouragement.
Right.
That you can do this. Like, I love apartments because I say they're so forgiving. Like, you can screw it
true.
up pretty bad and not lose everything.
And plus, if someone comes to you, you can actually say, hey, don't do this, and this is why.
Exactly.
Which, I mean, that helps out a lot.
Exactly. So if you can find somebody to learn from, and that's why I want to have this course, is that I can help people not make some of the mistakes that I've made in the past.
Right.
And help them get, forward, help them go forward with their investing journey faster than I was able to do it myself.
Now, if you compare rates from residential to commercial, are they like vastly different?
They're lower right now, so it wasn't always that way. So today, I think a mortgage, like a 30-year fix, is somewhere around 6 or something. And our rates right now, if you wanted to get like a 5-year fix, let's say, you're probably at 5.5%, 5.6%.
Sure.
On a 5 to 10-year fix, really, the spreads are pretty thin, so it's not like the rates changed much from 5, 7, or 10.
And then the terms of the loans, are they the same? Like,
So it's a 30-year term, and this is one of the things that people also feel uncomfortable about, is like, a 5-year fix, that's so fast.
Right.
And the thing is I'm like, you need to shift your focus, because this is an investment. So this
Right.
is like a vehicle that you want some flexibility in. Like,
Right.
to refinance and pull cash out to go buy another property,
Right.
or to sell the property to trade up. So our loans pretty much most times have prepayment penalties.
Okay.
So you don't think necessarily, the most important thing is not how long it's fixed for. It's not the interest rate.
Right.
It's kind of like the whole pie. Like, what is your plan with this property? And based on that plan, pick the program that works best for you.
Okay. So like, obviously the rate doesn't matter if the property cash flows too. So you wouldn't buy it if it didn't make any money.
Exactly. And then you still wouldn't get a loan because it wouldn't cash flow.
Which makes sense.
Yeah, they'd say, sorry, you can only qualify for this amount,
And then most the stats, they show that most people don't even keep a loan for 5 years.
Exactly.
They end up, they sell, they upgrade, they divorce. Anything could happen. Like, you don't know.
Yeah, and this is how we grew too. So we did that like Burr method, right?
Yeah.
Like the buy, renovate,
Repeat.
rent, refinance, repeat.
Yeah.
So basically, we would renovate a property and then refinance and pull max cash out, buy
Okay.
a property with that. And then, like a year later, I would sell the property and take that money and buy another property. So it would let me buy 2 properties just by increasing the income on the property and pulling cash out, then selling it. So I'd get 2 properties out of that.
And the money you take out is not considered income, so you don't pay
It's
the taxes on it.
tax-free. Yes.
Man.
Where else can you get tax-free money?
Not very many places.
Not in the stock market,
Yeah, not in Bitcoin.
Nope, definitely not.
Well, it looks like our 30 minutes is up. I want to thank you so much for coming on the show. Do you have anything, or actually, how could people find you if they're interested in working with you?
So you can go to our website. It's getinthecashflowgame.com, and that actually will take you to financing if you're looking for a loan. And if anybody's looking at deals, I mean, it takes me like 10 minutes to underwrite a deal. So I'm happy to look at anything you have and kind of give you my ideas and what I think. So.
Okay, and I'll add your website, your Instagram, and everything else onto the episode. So this is a wrap of the episode. Thank you so much, and that's it.
Thanks so much.